Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Oh, it was good. You just really, kind of a weird week. I had some stuff like kind of pop off on Monday, and then I didn't go back to them. And I look and like MDB, it just pretty much fallen all week. So some tech, gave up a lot of their recent gains. Got back into some healthcare stocks, scaled out of some oil. Just mostly managing stuff. Not a lot of new positions. I had a couple go crazy on Friday with some puts on SMCI and AVGO, and that's a read that we had a couple weeks ago that really paid off. So you just got to kind of stay nimble. I mean, I don't think you can just we don't have the market going in one direction. We don't have sectors going in one direction. So that's where the extra homework and sizing is really important.
Yeah, I, a really weird week. I try to contain it to the room because I don't like bragging too much. But our first of all, thank you because our conversation on sizing last week about just the dollar amount versus share size.
Yeah,
I really took that into consideration because I do play a lot of stuff that's a dollar, some stuff that may be just a little bit below a dollar. When throwing $800 or $1,200 at 1,000 share, I can do better. I mean, I really can. I can up that a little bit, and even usually when I go large in those positions, it's just another 500 shares. That's just kind of my pattern. Had a little conviction in the weed place. I already had some, so I put a dollar amount in there Monday morning, and boy, did that work out for me pretty large. Timing is everything, so I pretty much bagged it in Tuesday. I needed to go. I needed to take a cigarette break. I don't even smoke, and I only played golf Tuesday. Came back Wednesday, and I was like, man, I think I can hit five figures. Um, Kind of stayed sideways the rest of the week for me. Walked away early Friday. It wasn't happening, but really good week. Um, and just interesting to me that I finally, I had the first, not finally, but the first time I've ever used the dollar amount versus sizing, it really went my direction. Um, Also, kind of related back to Sunday. Um, I always say, stick to one, and then when we go over our stuff, I kind of like to pick a variety, so you have options to pick from. If I would have just put the weed plays as my leftover three, I'd have looked like a genius, and that's what I ended up playing. That's where all the action
yeah.
was. Um,
Well, yeah, and it was really interesting to me. How ACB. It's almost like they just saw like it was the same setup as
yeah, yeah, yeah.
PPC, and it's like and it just followed. It just
The
lagged
same
behind and
the
followed the
same
same thing.
levels too. I mean, it hit
Yeah,
75 cents, and I was like, guys, we're gonna do 75. I pointed out to everyone in the room so they really get this in their head. $75, a buck 50. Just get it in your head. Watch for strengths
yeah,
around there. If not, take some money, let it dip back down. And like, no, it followed the same pattern. Those things were really responsive to the conversation about stuff's taking time right now. I mean, the moves just not happening in 3 days, and then bleeding out. It's taking a week and a half or 2 weeks. Um,
yeah. And there's a so I'm gonna compare two stocks real quick that don't seem like they have anything in common, but Tilray and X. So I got in
yeah,
early
yeah.
on both of those, right? And so they made this big move up, and I'm still of the mindset like I keep some. I've kept about a fourth of the X I had, and then I've kept about half the Tilray I had, just because the flow supports that, and I'm not gonna have like a 1% drop or 2% drop day or anything like that. Really, just shake me out of it. I'm not adding here, but um, I think just overall learning how to manage a winner is really important. If you want to kind of just keep building and just take the mindset that I don't want to need to enter trades all the time. Like I'd rather trade less, and that you've got these stocks that are in a great spot. You have an entry. I mean, you're not going to, the 160 is not coming back on Tilray anytime soon. The flow's still going. So you just, you find a way to keep some. And it's a lesson, I've learned the hard way on a few of them. I mean, like Coin and a couple others where, I was way up. I sold, didn't really, no reason though. I mean, it still was fine. And I had already made profit on the trade as a whole. So let the free shares be free for a while. You see this across a number of different sectors. So I think it's a good spot to be in, and you just have to have a position enough, that's small enough to where it doesn't really stress you or bother you when you just get kind of the accumulation phase of a stock going on.
Yeah, you say those two stocks don't have anything in common, man. But to me, one of my, I want to say top three, if not definitely top five checks that just I have to have if I'm doing more than a scalp. They have theses. There's a reason behind it.
Yeah.
We have. There's an event. There's more than just momentum, and that's what I think a lot of the Twitter traders miss. Is they're trading just pure volume. They really don't pay attention to a lot of stuff that is related to volume, but they're just looking for the volume on the day. We're looking for the event on the time horizon. It's going to happen over time. It's just there's no way if this event happens that this should not have an extreme increase in price. I mean, Tilray's 100% already. I mean, and it really hasn't even happened. It's just the idea of it happening. So should you take some off the table? Sure. Should you keep free shares? Sure. I think the first time anyone gets a decent winner to them and they pay taxes on it, they'll start really thinking about keeping stuff longer. Just for the tax burden that changes for you. But that's kind of like learning how your style's going to work. Do you just take half off? Do you just take off what you put in to get your position back? Do you just accumulate more? Some people buy more. They just keep buying. I have a lot of friends that I guess they have money coming in from different directions, but they just buy stuff. They don't even care. Like, they treat it like a bill, and some months they're like, oh crap, the bill's a lot this month. They don't care. And that you got to figure out your long-term part of it too, because you can take pieces of your day trading long term. Because I mean, you're in the mine. You're gonna do good work. Just think of, like, horrible analogy coming in. Horrible. Just think you're an African diamond miner, right? And you're down there just digging, and you're finding all these diamonds. You're getting your just little percentage of it. That's day trading. Well, occasionally you're gonna find one you can put between your toes and walk out that goddamn mine to secure your future. So while you're doing that, like have a plan on how you're gonna hold a rock between your toes. Sorry, I watched that.
That's how it works. Yeah, it definitely does. And I think for me, I'm still pretty new to trading, just a couple years of studying this, and I think just building enough confidence in the work that the work is repeatable. And like with losses, you just take it and you move on. You're gonna get another one. You're gonna find one, and just get your emotions in check by sizing correctly. And this is a continuation of our conversation last time. But when you are sized to a position where you have trouble walking away from a trade, that's too much.
Walking away from your phone screen. What do you mean?
Yeah. Yeah. Right. Yeah. Exactly. I see this too with some of these this theme of things taking time. Like when I put something in monthly swings, a lot of times the way those work, I am expecting a kind of near term little move up, but I don't I don't know exactly where a stock's going to go, but I know the setup is still holding together. So if it's going to dip down, I think it's probably going to go back up. I mean, especially if there's a line above where the strikes line up, like Honeywell 195, where an easy trade is to just you go back to that. You stick with something that has a good setup. You're not constantly just chasing whatever Tesla's doing pre-market or anything like that. Just stick with your homework and let a setup play out and be successful, instead of just you know trading it for $20 and moving on. There's more there, and there's a lot of our setups like that where there is going to be more there, but you just have to be patient. You have to buy time. Best way to buy time is shares. But it really it, we don't post a lot of stuff that's just like quick hitter and done. We don't do a lot of that. We prefer something that's going to hold up and sustain itself. And it's really in the kind of difficult conditions like right now where I think a lot of that work really does stand out for us.
Yeah, I think if I mean you post stuff every day, so I'm not gonna say you're wrong. We don't post a lot of the quick hitter, but we're not definitely there for that. But you post stuff
Yeah.
every day. I'm up at 4 o'clock West Coast posting news every day. I mean, I don't.
Yeah.
I think the market's on, I'm up at 4. I mean, and I
Right.
think everyone should have that in their
Yeah.
arsenal. Like, what are you looking for in your setup? Not just for, hey, professor's trading this, or professor said A, B, or C. I'm gonna pick one, and at 6:55 we're going in. Like, you want to, like, if you watch Read the Room, like half the chart shapes are usually the same because I'm looking for the same setup, and or there's a lot of similarities in those things, and that's where you really need to start. Um,
Yeah.
I wanted to say before, like to the first part of that, um, because I think it's important, is like anyone can get an entry, but it's what you do kind of after that. And I used to say all the time, um, your entry sucked, just move on, right? Like, and I kind of
Yeah. Yeah.
I kind of stopped saying that, but I need to bring it back. But if you look at the people that really bought into that, like Pele and Goose, their problem now is, oh, I missed my entry by 5 cents, because they're like so ahead of it that they're predicting what would happen to make the setup work for them. And I don't think a lot of people do that. I think a lot of people are like, "Oh shit, I just need to get in this." Like,
Yeah.
you need to already have the whole play laid out, like before you even hike the ball. Like, all right, this should hold this level. This would be the best spot. This is a spot I could re-add at, because I'm only gonna, I'm not gonna plant my flag on this first one, even if I'm only getting 25 to 40% of the position. I'm gonna get the next one here, or in 3 candles, if we're holding, I'm gonna buy in again at the same spot. You just got to have a whole plan and not just what do I buy. And that's really why I'm limited in information a lot of time, because I want people to, one, ask questions or kind of figure that stuff out for themselves, so they have a checklist that they go through, because you have to do that, let's say, within a minute. Probably 30 seconds would be if you're a good trader, but you have to do that like in a minute after looking at a stock. And it's not just because the professor or Unc said to buy. It's just not. Or anyone on Twitter. It's just not. If you're gonna buy anything, buy something that you just read a news article on, and because that's gonna be more effective than following my late slow typing ass. It just is.
Yeah, and I mean that's the whole reason that I I don't know of a lot of people that really do what I'm doing with my morning notes. They just alert contracts, or they have these triggers for options that are so far away from the current price that you can't even really do anything with them. And I think that's by design. Those people don't want anyone buying that stuff. They want to sound smart and then post a big winner that they didn't even talk about. That's their whole approach. But anyway, so what I try to do is I just try to look at a lot of factors with flow and like lines that are likely to be tested and all that, and just say, going into it, this is what I think is going to happen. This is what I'm going to do, and then people find their own contract and find their own entry for it, because I type very fast, but by the time I type it, that thing's moved 50 $75, and that's just dangerous to trade options like that. So I think for me, it's the quick hitter within a broader thesis. That's what I'm after. So like MSTR is a good example. I've actually been buying crypto small caps because they're holding up better. But that one, I'm looking for it to drop below 334, and then kind of like we go from there. I just see it in the flow and just the whole chart setup. It needs one big jolt down before I think it can be good and sustain anything. So I think that all this stuff I post, they're usually stocks that I have a pretty good, well developed thesis on, but just see that quick move, and the quick move in the options trading is kind of what you want. So so that's sort of my how I balance those two concepts.
I mean, I've grown to like you, but um, let's just be real. Like, if we met each other outside of this, we probably would have just kind of like passed each other by, right? Like, we
Yeah,
are
yeah, yeah.
we're totally different in general, um,
Yeah.
and that should tell you something, that we hang out every Sunday. Not you, but the general population, that we hang out every Sunday and do this. Um,
Yeah,
for me, it's cut and dry. I don't care where I get the information from. If it's good, I'm adding it to my recipe. I want to leave no stone unturned. I'm talking about money I had to swing a hammer for over here, right? Like,
yeah,
this. I don't want to go back to that. So I'm very diligent. That one of them D's in DD. I'm very diligent in the work. And when I found you, I was like, this guy lives and breathes the work. I used to say I was the hardest worker in that other room, and then I was like, I had to stop saying it. I just had to stop saying it. And people need to get that from us, really. Just, you
yeah,
really do. Like, we're here Sunday. I got up at 7 o'clock this morning. Well, I was up like six in bed, but I didn't get out of bed till 7 on the West Coast. It's Sunday morning. I was up yesterday, same time. It's because it produces. You have to put the work in. I mean, I do kind of believe that you have to put the work in, but that's really what you need to learn from us, is finding time to put some work in. And if you don't, I have a plan for you. Go back to work and treat it like a bill, and you'll win.
yeah,
I mean, it's that simple. I think a lot of people just skip that basic step when they're messing with it, when they're messing with anything, and that's why they got on here in the first place, was to find a get rich quick scheme. And we're not that, and there really isn't one of that. And I can give you the perfect comparison, because this is where I wanted to start before I start ranting again. You can listen to a guy like Hugh Henney that will tell you SPY is at 443. It could go to 444.38, maybe 445.37, but I don't like it unless it hits 441.93 today. And then I can load a fucking $30 ODT both ways, and one of them's going to win, and I can look like a goddamn genius. Or you can listen to a guy like me that has told you these last four candles in August were probably going to be shit. The market was going to be sideways for about the last 3 weeks. I mean, who else predicted SPY with like a $10 range last week? I think that was
yeah,
only us. I really think that was only us. Who did it the week before? I think that was only us. No one's given market direction at all. And I think that's the overall, that's should tell you who's real and who's full of shit. And they're trying to tell you this is easy. It's easy. And if you mess up, it's your fault. Or load calls and puts, stuff like
right.
that. And that's not what we're telling. This is some hard shit. You got to be diligent. It takes work, and we're here for it. We're here to work with you guys. So, because it's making me money, and I'm assuming it's making you money, or you wouldn't be here too.
Yeah, yeah, yeah,
Um,
definitely. And the sector fragmentation thesis from about 3 weeks ago, that's playing out as well. And so if you kind of look under the hood of what a sideways market is, that's what it is. It's this a lot of this pop and fade stocks making big intraday moves but kind of going nowhere big picture. All that is going on, and then you just have your sectors that are actually showing some strength in metals and oil. And when those two are going off, usually it's kind of bad for tech. But then, some tech's holding up too. So it's not easy to just be a bear either right now. So that's where I've always felt like there is value in looking at individual names. I can't just be a purely broad market guy.
sure,
It doesn't work for me. So
sure.
that's that's been a lot of it too. I think the thesis on the broader market comes from the individual names for me, and not the other way around.
Oh no, 100%, and that's again why I hang out with you every Sunday.
Yeah.
The where I can focus is a big difference than when I was doing this, on my own or freely. um, just finding stuff or understanding the entirety of a move was never a thing. So, unless I lucked out into perfect timing, um, big winners weren't regular in day trading for me. It was always the swing trading that worked for me. Um,
Yeah, yeah, and I'll say one thing too about our system from my end. I find a lot of names, and I find you know new names and new sectors here and there. Previous names kind of cycle back, but one of the big valuable things is the setups that have worked, and then where the TA is ready again, and
mm-hmm.
then that gets us ahead of the flow by 1 or 2 weeks sometimes. So getting stuff that I had found, and I always make that joke, is this one of mine? But getting it back on our radar, I mean, that's been something that's been really good for us too. So and it's part of this new process, of the way we do collabs now really helps with that too, I think.
Yeah, no, I mean, when we first got in the room, kind of figured it out over the first 8 9 months. Like I figured out early, like, hey, me and you can't compete. Like one person's kind of got a lead, in general, and just on the fact that most people like options, it just made sense to to,
Yeah.
to kind of go with the stuff that is mostly on your radar. So I just went into that mode of, like, don't let any of these fish out of the net, and
Yeah.
um, I think when I started, I was just like 280, 300 stocks. I'm up to 500 stocks on my big list right now, just because
Yeah.
I don't let anything go, and my process is pretty simple to get through them. Um, so yeah, it's I just take a lot of notes and hold on for the ride wherever you take me, basically. um,
Yeah.
let's get into some market stuff though.
Yeah.
I noticed ACI up 20%. Kroger's not moving at all. I think that deal's done. Um, they're selling stores out here, and I think they're selling some stores on the East Coast as well. So they're not a monopoly.
Yeah.
I just kind of wanted to mention that, not a big talking point, but I just think that deal's done. By the way, I mean it was flat. ACI was $21 for like 6 months. Didn't really move, and I think it's like 23,
Um,
24 now.
yeah, and that's where I added it, like 2075, and then I just on that bigger drop under, I didn't buy any, I didn't touch it, just because I figured they're gonna get this deal through, and
Yeah.
was willing to just hold through all that. But the good thing about this, I think now, is that I think Kroger can respond to flow a little better with that in the rear view mirror.
Sure.
That's going to be good for them.
Yeah, yeah, that's a great. I'm glad you said like how you played that too, because Twitter was something I wanted to say earlier. Like, there's always those plays, and this was one as well, where like the news is just coming in. Twitter, you could have put money in like April, June, July, and it went from upper 20s to $42 when they closed in October. Um, and the same thing with this. You're just waiting for this deal that's been pending for about 6 months as they're working on it. It never really got bad news. It was just they had to get in compliance. So again, always research plays like that.
Yeah, and you got the same deal with Activision at $95 is probably where it's going to end up. But really,
Yeah, that's
that
a good
you
one.
needed to be on that in the '80s when Goose and I were talking about it all the time. And that's where options were really tricky on it, just because you didn't know how long this was going to take, and that one's got Europe to deal with, which is harder on this kind of stuff. But yeah, you see those opportunities, those X right now.
Yes, yes,
It's going to be 35 plus, and if you have some, you just can wait it out, and that's where I'm at on that one too.
exactly. Yeah, no, that was definitely the whole point of that. Kind of want to get into the cycle because I'm at the end of the rope of my 4 to 6 weeks. 9:15 has showed up. I said that's probably when we're going to pick direction. We do have the rates this week. That's probably I don't think the rate, I said it in Read the Room, I don't think like the decision itself is very important. But
Yeah,
I think the narrative around it will. Um, They just need to say, ain't shit we can, and I don't think they will, but ain't shit we can do about gas prices and food prices with these goddamn rates. So
Right.
I mean, help us out because I mean
Yeah.
that's really where it's at. I mean that's all the numbers last week said that basically. So
They did, and even you're seeing like PPI was not good, but the market didn't just instantly sell off to that. Now it did on Friday, as I think maybe the market digested some of that, or it's anticipating next week a bit. And I think this is kind of what you have to be careful about as a trader is, if all the anticipation is kind of down into the events next week, then the actual reaction to the event, especially right after, might not really amount to much. And so I think you just have to just trade around these events, and not try to get some big windfall on one specific data point or one rate hike or whatever. But you kind of study it to see how do your setups hold up through these events, and then you
yes,
just be ready, to grab something when you can. And that's kind of where I've been. Now, one thing I'll say too, this 460 SPY thing is really interesting to me because we got over 453 for a little bit. Or no, actually, I'm sorry, no, not last week. But we got over we got over 450, and so it's like, hey, we're $10 away. Kind of a no-brainer that we're gonna head up there. It still feels miles away to me that we get there.
we're still
And when
440,
I say
10 bucks
feels, I
away
mean
too.
like the flow, that this kind of unresolved flow into like the 430 area that's still out there for October. So I can't shake that as a possibility, and it's why even when we're at 450, 430 seems closer to me than 460 does, even though there's such a difference in the amounts there.
Yeah, no, and that checking that the last few weeks has kind of been what I've been building my thesis on going forward from here. Like trying to see there. I mean, if you don't have anything that's next door already, then there's not hope that we're going to run through it, in my opinion. Um, I see kind of the second cycle of August to April um, coming in, and not necessarily.
Yeah.
I don't think the time frame will be as long, so it's not going to be August to April. Let's go like September to January, maybe, just because the first of the year is usually pretty good. So I'm gonna pick that spot. It's gonna. So I think we get short. Long story short, I think we get the numbers, whatever they may be. They don't really matter. What's gonna matter is what they say. I think there's going to be a little bit of bickering. I'm also heavily leaning on this 460 thesis we're talking about, but
Yeah.
we're gonna pull back for a couple weeks in a lot of things. It's probably going to be a little ugly, but you're going to get the second cycle of people because you're going to have to they're going to have to reassess. It's the same litmus test again. Who has the biggest runway, and who's going to have market share when we finally get to the soft landing or out, back to normal, whatever normal is this 2% bullcrap that we're never going to really reach. But when they
Yeah.
finally let it go for whatever reason, probably after the election, to be honest with you, um, when they finally let it go, who's going to still be alive? So we're going to go back to that. Who has money to make it 12 to 18 months is what they're going to want. I think that's my number of how much money they're going to want on hand to put their money in it. Because big money doesn't want to wait. No one wants to sit
Yeah.
around and let their money do nothing or even let their money do 10%. Big money looks for a lot more than that. So um, it comes down to the risk of, hiking the shit out of rates short term to kind of break things to get back to zero, or riding this out and kind of choking the shit out of everybody for the next, I don't know. I mean, I say 12 to 18 months. If we just pause rates from here on out, right? No more rate
Right.
hikes. This is working. We just got to give it time. That thesis, trying to choke the market out. I don't think it responds well to that because again, they're going to look for who has money to make it that long, and then try to predict market share when the smoke clears. So that's the two theses. Neither of them look good short term. So I think that's a problem with the market getting above 460. But I also think there's a lot of things that are going to pick themselves up because they're not going to go any lower. So that's what I would be looking for in those 2 weeks of hell or so.
Yeah.
Is stuff that is staying sideways or still trending up. Um, and then when the not in 2 weeks, but like 3 or 4 weeks, that's when maybe like the Teslas will be at a decent level again for you to re-enter. I don't think you're going to get 150s or 100s, but you might get that 184 or something like that, or
Uh,
192 that we argue about.
yeah, absolutely. And I, stocks pop in my head as we have this convo, like Lyft and Roblox. I'm like, those can probably do okay in this. Adobe's probably going under 500. Might go to like 480, 475. MDB is there's that ugly, what was great at the time, but that earnings gap up from two earnings ago. It could work its way back down in there. Snow's going to play off the same levels, it has been. So it's not going to be just a big disaster, and it's just going to retrace to some spots where we've been. And I think this is where options traders, it's with options, everything's magnified. Every move is magnified. Every 50 cents on SPY, every dollar on SPY is like life or death. So I think that the downside that we might see over the next few weeks is going to seem bigger to people like that, and they're going to have trouble seeing some of the upside that we're going to find in some different sectors, because we can kind of cut through a lot of the noise. So I look forward to it. I like some good selling. I like seeing my setups tested. So this should be exciting.
I mean, like 428. I mean, they're gonna scream murder if we get that in October 20th. If Spy's 428, they're gonna be
Yeah,
the
yeah.
sky is fucking falling. I mean, and that's where I think we're headed to be. I mean, that's not a.
Interesting date you picked, because that's where all the flow is starting. So yeah, that's what
I'm
my
just lucky.
yeah.
God. But yeah, I mean, take notes, people, because that's what I'm reading here. But it's just what it. I mean, you see it happening, you see it setting up. If I mean, you can use one of our big catalysts, but they're not curing COVID. I think that's going the other way. That's a headwind, not a tailwind.
Yeah.
The war in Ukraine ain't fucking going nowhere. We done figured that out. They're not stopping that. And politics aren't playing nice in general with the budget. So, like, where's your catalyst? Really? Where's your euphoria? Where's
Yeah,
your
and you
hope?
know what? Um, War isn't even a good catalyst to the upside right now. I mean, you're just seeing it's just brutal for LMT and RTX.
Yeah, no. I mean, ending the war, ending it.
No, I know that's what I'm saying. Like,
Yeah.
but it's like with COVID, you could say, oh, the vaccine stocks, they're going to do well during this. Ukraine war is not really anything that was good for stocks with that played out already, and you know you could get some natural gas activity around it still, but yeah, that's just stagnating, and so
Yeah.
it's gonna drag on and
Well,
on.
there ain't much long term ROI in a proxy war, and there ain't much long term ROI in a pandemic either. So,
Exactly.
I
Yeah.
mean,
Yeah.
and so like that, those are what we've been preaching. I mean, I give you credit for that one, but the pop and fade the last 3 weeks, that's just is what it is with those events. So,
Yeah, and this and also the strength of the dollar um, is a big part of that pop and fade as well. So that DXY, it's hard to read and trade and everything, but the strength I did see there in futures has definitely influenced tech to not really hold its gains very well. So you see there are a couple ugly weekly candles in tech that I think will be worth watching into next week.
oh yeah, there's definitely little blood, a little. I won't say blood in the water. There's some chum in the water though. That's for sure. There's some setups that people are definitely thinking are overextended for
Oh
sure.
yeah, and, I mean the only people in trouble on those are just chase like Nvidia. If you're bagged on Nvidia shares, you were doing some ridiculous chasing over the last couple months. So
Yeah.
um, yeah, and that was the one we talked about that had some potential weakness for a pullback.
My
But it's still, way the
my
hell up from where it was.
my account looked way better with Nvidia at 500.
Yeah,
Just saying, but we're just hanging out there for sure. That's a long term one for me.
yeah,
But yeah, like you're saying, I'm nowhere near like even close to under. Uh, I'm not even close to 100%. I'm not even close to 200% under
yeah.
like that. So getting back to entry, I mean, that's not probably happening. We're probably
And there's a
beyond
lot
that.
like that. Net at $45.
Yeah.
I'm still happy to be there. It went down almost 5% on Friday, but it's $62, so
Oh,
that's fine.
Tesla, a good one. I hate talking about it unless it's time to talk
Yeah,
about it, but it's a good one too. You think most people got in that 120, 125, right? Most people didn't catch the bottom of that. But anyone that got in
yeah,
there, they're 100% right now, and that's where we're kind of holding. That's where we're kind of building on. But what are you gonna do? Like just hang out, right? Like
yeah. You just hang out, and you just know that 280 is probably going to be a problem. So, plan accordingly.
darn,
Uh,
100. You're talking 100 and you're talking like 130% up,
right.
120%
Yeah.
up. Darn, gonna have a
Yeah.
problem up there, guys.
Right. Yeah. Could go to 265.
Oh no.
Yeah.
Yeah, yeah. Awesome. Let's do spy and then get out of here.
Yeah. Yeah.
Um, dang it, I went over it too. And oops, let's go big guy. What do we have? So 451 the high. You had 450. So yeah, I gave you the high. So you won the high. The low was 42. You had 38 out of 40. So I got the low, and the range was what is that? $9. I had $9 range. You had $12 range. So I'm a little ahead of you on that, but you called the top perfectly. Um,
Yeah.
but the tight range
And
still. I mean, we're calling 12 to $9 range on SPY. Who does that?
with CPI and PPI, not a lot of people were doing
Yeah,
that.
not a lot of
Yeah,
people.
they were thinking it was gonna move huge.
Gonna move huge. I told y'all Pac was getting paid
Yeah.
sideways.
Yeah.
Um, I'm gonna let you go first this week because I really don't know, and I'm gonna steal a little bit from you to be honest with you.
All right. The the big picture story before I get to the individual numbers is these 10-20 puts, and we're at I think for a solid month now, the top 15 open interest contracts on SPY are all puts. They're not all bearish puts, but they're more bearish now than they have been um, in recent weeks. So the big story is 10-20 440p, 430p, 420p. Those are three of the top five contracts. The only one that leans slightly bullish is 420. So 430 and 440 are like heavily bearish, and they're close enough now where I think that can, in the way they keep piling into those 40,000 volume a day, stacking up on these, that can start to have an influence near term. So that said, I'm looking at I'm going to say 438.50 is
You
going to
like
be my
that?
downside.
You like that number?
Yeah, and my upside, I'm going to say 446. I don't think we get much upside this week.
Ooh, ooh, that's pretty. Man, I wanted to take that too right there if you see it, but I'm gonna talk the bottom out first. Um,
Yeah,
dang it. The thing is, if we drop, I'm gonna stick with my thesis, man. I do think we just react negatively. People take profits because the feds won't directly say it. They're not gonna blame the people that appoint them, especially going into an election year.
yeah,
So I think they're gonna dance around it and sound like more of we're gonna choke this thing out instead of take control, which there's a longer time frame. People are gonna step out a little bit. So I am going to go. Man, that's a long way down. I'm gonna go 435. I got to get under you though. I'm gonna go
Yeah.
435, and then I'm gonna go. So I'm gonna have a bigger range than you this week because I'm gonna go 447, just a dollar above you. The 1 hour consolidation there last week. Um, yeah, I think we do. I think the beginning of the week is going to be kind of quiet, but as soon as they start talking, boy, are we going to have some movement, and it's probably going to be to the downside.
You know what sometimes happens that's interesting when we do this? I'm going to start actually documenting when it happens, but like when you're a little above me or I'm a little above you, sometimes it's the one of us gets the body of the candle and the other one gets the wick of the candle.
No,
I love
shut up.
that. I mean, that's the way that that works. Just it,
We need
it's
to
fun to
have
go with.
we need to have Goose make us little like head stickers for that,
Yeah,
right? And then we'll zoom in on the candle and put one on each of it
yeah,
and then post it on Twitter. Like the you were here this week and then the candle fills it in
yeah.
and see where we were. I like it. I like it. Yeah, yeah. So just to clarify thesis, I'm usually not this direct. The early part of the week, isn't it? Is it Wednesday or Thursday? They drop numbers. I think it's Wednesday,
Yeah.
and then they start talking Thursday. So yeah, Monday, Tuesday probably a little bland. Pop and fade on the news, and then some spice towards the end of the week. Um,
Yeah, and just to contextualize SPY within a couple of other sectors real quick. Oil's over 90 bucks, 90.77. That's a big thing to watch. I mean, I don't even know what to say about oil. I said weeks ago, and then on the way up, finding spots. So if you're in oil, you should have some. It's is likely to go higher. I think you want to buy some more time. I think you want to start looking at the laggers and the small and mid caps. That's kind of our specialty. But yeah, that's in good shape. But it can pull back and consolidate too. So be aware of that. And then copper still, as long as copper's above 375, we're in pretty good shape. So it's 380. Still looking for that run to four. So that'll be tricky if SPY is gonna pull back. So I am actually looking for copper to test that 375 area. If you see a dramatic move down in some of those, there's usually a chance to get the recovery trade FCX SCCO. So kind of look for those in my notes this week as well.
Dr. Dre said trade weed every day. That's
Yeah.
all I got for you. You ready to
Hey,
get?
but
What's up?
oh, go ahead, go ahead. Yeah.
No, no, go ahead, go ahead. I was gonna kill it, but go ahead.
We're just on an energy note. Yeah, uranium
Oh
uh,
God, Jesus.
totally blew the doors off my top at 63.80, 66.25. So it's just up in Valhalla. You got CCJ flow coming in at 45. Small caps still much safer. Tons of room above UUU, and UEC. So
Fucking.
just big winner. Just enjoy that if you're in it. That's
Yeah,
what I'll say.
no, no. I paper handed the shit out of that.
Yeah,
I had good entries too. Yeah, the best of us do that. Good entries, paper hand. Horrible.
yeah, yeah.
My levels were solid on both of those, and yeah, I don't want
Hey,
to
I
talk.
had I
I don't
had
talk about.
CCJ at 21 bucks. Um, I got out at 32.
Yeah, okay, you know how I feel.
Home run, but it's 40 bucks. I
Yeah,
mean,
I know,
it's
I
40.
know.
It's got flow to 45. So
Yeah,
still got some of the small caps, but yeah,
yeah. Keep a peace, right? Keep a
yeah,
peace. All right, you ready to get to work?
yep.
All right.